The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Now, a Sun Life survey found that 67% of high net worth individuals here in Singapore worry their wealth won't last beyond the next generation, highlighting concerns about long-term wealth sustainability. In 2025, high net worth individuals increasingly explored specialized and alternative investments, focusing on both growth and capital preservation in a volatile market environment. So what strategies did they adopt this year to grow, protect, and optimize their portfolios? And as we head into 2026, what approaches should they prioritize to ensure wealth can endure and compound across generations? Well, joining us today to find out more is Lionel Lee, who is the money expert at the Better Foundation. Hi, Lionel. Welcome back to the show.
Hi, Hongbin. Thank you for the invite. Yeah, glad to be back at Money FM 89.3 with our listeners. Also, just like to say hello to listeners from India and Australia. Some of my students who are actually listening in.
So. Hello. Thank you so much for tuning in.
trying to increase the listeners for our radio
Thank you
station.
very much. Thank you. Well, Lionel, let's get right into it. I mean, we're almost to the end of this year, so let's take a look back. I mean, looking back at 2025, what were some of the notable investment strategies high net worth individuals adopted to grow and protect their wealth?
Okay, so I firstly have to start by saying that I'm not actually from a financial institution, so I'm only able to share with our listeners as a peer. So what I've seen fellow high net worth individuals, friends who are high net worth individuals, what they've done is they've moved some of their money into private credit and SME financing because they are looking at cash flow rather than just global speculation. What I've noticed, and I've done a bit myself, which is probably not so common in Singapore yet, is what I call identity-aligned assets. So these are actually investments that reflect who the high net worth individuals want to become and not just what gives returns. And this is happening more with the younger high net worth individuals than the boomer. What that means is you see them putting money into stuff like climate-resistant agriculture. They are building up IP or intellectual property portfolios. Some of them are even going into longevity biotech. And for those that have kids, there are some immersive education platforms that are actually of interest as well. The third one that comes to mind is actually another oddity, which is parallel reality assets. So these are not just the typical AI, but they're basically the synthetic realities or platforms that blend simulation technologies with AI-generated worlds and gamified behavior training. And these are basically for high net worth individuals and families that are looking at wealth planning for the future.
Okay, so from your observation then, how did these strategies help shape asset allocation decisions for high net worth individuals this year? I mean, which asset classes stood out as effective wealth builders?
So in 2025, I think because of the way that the markets have been moving, some of the high net worth individuals are starting to think differently. So instead of asking what asset should I buy, they are starting to ask the questions like, what kind of risks, responsibility, and resilience do I need my wealth to deliver for me and my future generation? So the shift is fundamentally how portfolios are being built. So you see the move from concentration to what we call layered allocation. The asset classes that stood out as effective wealth builders, I mentioned earlier, private credit and structured cash flow assets, and also real assets with operational control. The move also into private equity with strategic involvement, and also human capital and cognitive assets are some of the areas that, or some of the strategies that are being deployed that shaped asset allocation decisions.
Okay. Well, I mean, I believe there's a survey that found that 67% of high net worth individuals here in Singapore worry their wealth won't last beyond the next generation. What's behind this concern, Lionel? Is it rising market volatility or the way wealth is being invested and drawn down over time?
Yeah, I understand you're referring to that Sun Life survey. I have to be very honest, and I'm very honest. I actually didn't look at the survey. So it was only when you mentioned the survey that I had a quick check. But I think the concern goes much deeper. I'm speaking also for myself as a peer. It goes much deeper than market volatility, because market cycles come and go. And what high net worth individuals are really worried about is actually the behavioral and structural wealth decay. And that's essentially the real fear, summed up. So high net worth individuals aren't afraid of losing money. They are more afraid that the wealth won't actually survive human behavior. The next generation won't know how to adapt, and capital will disappear quietly and actually not dramatically. So that's why heading into 2026, high net worth individuals and families are investing less in what to buy and more into areas that are less talked about but important, and that's money literacy, governance frameworks, and surprisingly, actually, behavioral training for next gen. And those are some of the, interesting points that are not probably talked about in the marketplace. The common problems that arise, I feel, are that the current portfolios are optimized for returns but not for sustainability. And that's what the high net worth individuals are concerned about. In sync with the survey, there's too much also dependence on market appreciation and not enough focus on cash flow and control, which is why I mentioned earlier about the shift to cash flow related assets, and also no clear rules for drawdowns across generations. So from their point of view, what they're looking for moving forward is an operating system and not just an asset mix, which is primarily what you get from your institutions, right, that offer you products and services.
Well, with such concerns that the wealth may not survive beyond the next generation, are there any concrete steps that high net worth individuals are taking to protect their wealth heading into 2026?
To answer that question, I think maybe it's easier if we just did a simple division of the high net worth individuals into two age groups. So the boomers are the ones making up a lot of the high net worth individuals in Singapore. They are the group that are talking to their private banks, whether it's on regular or irregular basis. But the younger generation are looking at it differently. So they understand that the money that they have may not actually be destroyed by the markets, but as I mentioned earlier, it's actually destroyed by their behavior and the behavior of their next generation. Why are they concerned? Is because a lot of the younger generation are growing up insulated from struggle. They lack resilience, and they are also inheriting without understanding. So what the families are doing, I'm seeing it happening in Singapore, but probably not enough. I see it a lot more with the families in other markets like the US and Australia. They are actually investing in structured learning systems. And so that allows them to help their next generation understand and be prepared to actually be able to manage that wealth. And also they come from the point of view that they can't really transfer wealth without actually transferring the mental models that they need their next generation to adopt.
Well, I mean, many high net worth individuals, it looks like they're thinking beyond pure returns and focusing more on risk control, liquidity, and capital preservation. How did this shift in priorities also shape, portfolio construction and investment choices this year?
So I think it's important to note that the high net worth individuals, they're not abandoning growth. But what they've done, or at least the forward-looking ones, they've actually re-engineered their portfolios to survive uncertainty first and growth second, especially going into 2026 where the market talk is, everything is a bit more doomy and gloomy. They're building portfolios that can absorb shocks, can remain liquid under stress, can fund multi-generational lives, and as I mentioned again, survive the human behavior. So returns still matter, but resilience matters more for those who are trying to get their portfolios to survive on a multi-generational basis. And that's the defining shift about how high net worth wealth is actually being managed heading into 2026.
Okay. I mean, despite high awareness of estate planning tools as well, it looks like only 25% have fully completed and communicated their plans. Why is there such a gap between knowing what needs to be done and actually putting proper structures in place?
That's a really interesting question because I actually talk about it in Australia, not in Singapore. I actually teach it in Australia, the University of Melbourne. So, but the gaps that exist, which I find in Singapore when I chat with friends who are high net worth individuals, is the gap exists is not because they don't understand estate planning, but because estate planning itself is not a technical problem. it is actually a human problem. So most of the high net worth individuals in Singapore, they actually know what to do. What stops them is what estate planning actually forces them to confront. So the gap is that the knowledge is intellectual, but the execution is emotional. A lot of the services provided for estate planning is essentially very technical. So it's documentation, but essentially estate planning is about identity, trust, and control. So unless the families invest in money literacy, they build shared mental models, they rehearse decisions together, and they treat estate planning as an ongoing system, it is very difficult for them to actually go ahead and implement it, right? So I think one of the points I talked about estate planning that I would like to share with our listeners is that you need to understand that markets don't actually destroy family wealth. Avoided conversations do. And in Singapore, many families are not very good at having conversations about estate planning. And that's the reason why it doesn't happen.
Okay. Well, then are there any metrics, these individuals should be tracking to see whether their wealth is actually on a multi-generational path?
There are matrices. I don't know, again, very honestly, if our high net worth individuals in Singapore actually do look at those matrices, because it's one of the most overlooked questions that you've raised. My point is that if families only track returns, they won't know they are actually failing until it's too late. And multi-generational wealth actually requires a different dashboard. So in the early part of the year, we talked about ultra high net worth individuals. Because of the size of the net worth, many of them are in a position to actually look at that different dashboard. But I don't think a lot of our high net worth individuals are equipped or have access to information that allows them to do that. But just on the show, a couple of stuff that I usually chat with peers about is, look at what I call wealth sustainability ratio, concentration risk index, cash flow coverage ratio, decision readiness index, which is often ignored but most important, governance effectiveness scores, even adaptability matrix, value to capital alignment. There are several more which may not make sense to our listeners unless we have time to actually go into some of them in greater detail.
Well, as we move into 2026 then, Lionel, what do you think high net worth individuals are still underestimating when it comes to sustaining and growing wealth over the long term?
One of the points that we raised earlier in conversation is that markets actually test portfolios and life tests people. So, as we move into 2026, I think the biggest thing high net worth individuals are still underestimating is how much their human behavior and not markets determine their long-term wealth outcomes. So most families believe that they are doing the right thing because they have good advisors, they've got diversified portfolios, they've got proper structures. But I found that wealth doesn't fail on spreadsheets. It actually fails between people over time and under pressure. So it's only sustainable if the individuals and families have better decision systems. They've got stronger behavioral discipline and they've got the ability to adapt under pressure. And that means they've got to actually build a system that survives any future rather than just looking at a system that allows them to make returns.
Okay, well then, what key investment or wealth management trends do you expect will shape how high net worth individuals allocate capital and manage risk next year?
Just linking true to the previous question, in looking into 2026, allocation of capital and risk, even just from my own point of view and how I'm doing it, I think it's, as I mentioned, it's how to design the portfolios to behave under stress. So to me, the big shift isn't about predicting markets. It's about designing capital, people, and decisions to endure uncertainty. So we need to stop asking what gives the highest returns. We need to also ask what system survives the longest. So it's not about managing wealth like a portfolio, but it's more like you got to treat wealth like a living organism. So that then allows, us to actually be able to ensure that wealth carries forward into the future generation.
All right. Well, some great insights from you there. Thank you so much, Lionel, for joining me today.
My pleasure. Thanks so much for the invitation.
Thank you. That was Lionel Lee, money expert at the Better Foundation. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at moneyfm893.sg